Welcome back to This GPT Life. My name is Karthik and I'm super excited and actually very anxious about this conversation because we had so much to talk about. And I really hope that you will like every bit of it because I loved all of it. Our guest today is Raj Sheth. He is a VC today, but then he has not been one for a long time. He's had 4 startups and 2 exits in the last 15 plus years. And interestingly, he started with a B2C startup and then went on to build B2B companies. And he's been an angel investor in the past. So we're going to touch upon his experience with not just starting companies, but also as a VC and an angel. So there is a little bit of that part of his career that we are going to leverage. But I think the point is this: while this show is all about how to go to market in the AI age with businesses leveraging AI for marketing and also in creating the value itself, I think this conversation comes really handy from mainly 2 places. One is that this conversation gets super deep actually into positioning for what you can in 45 minutes. And then the second area is about brand and how you can use a brand and how it actually works in your favor when you start to build a brand over just going and ramming with your sales messages and trying to win with just messaging. So I think there is so much that we can learn from this, and I'm really hoping that you have the time for the next 45 minutes. This is going to be a lot of fun. So our guest is Raj Sheth. He is a 4-time founder with 2 exits in his pocket. He is a VC today. He's had an experience as an angel. So there is so much that we can learn from him. Again, I want to stop myself from talking because I am clearly excited and I hope you are. Let's jump right into this conversation with Raj Sheth. Raj, you've been involved with startups for a while now. You've been a founder and also an investor. Can you give us a 5-minute lowdown on what you're doing today and how you got here?
Okay. I started my first company in 2006 full time. I had just moved back from the US at that point, back to India, which is where I'm from, Mumbai. And very quickly, over the last 17, 18 years, I have been a full time founder and started 4 companies. So from 2006 to 2011, I was doing 2 B2C consumer marketplaces, one after the other. Like many of us on the early internet, I was romanticizing building a consumer first company, what we commonly call B2C, and a lot of fun lessons there, which maybe we'll get into. But both of those companies eventually failed. They were 5-year journeys, but I didn't know how to get to revenue and profitability. The first one was a classifieds portal, and like now Quicker or OLX, those are the analogies. And the second one was a direct to consumer high end jewelry website, which was like, think of it as a Carrot Lane or Blue Nile. And then folks usually say in your 20s, you're young and dumb and you do consumer, in your 30s, you wisen up and do B2B. That's probably not universal, but I was lucky enough at 29, after these 2 failures, to be very honest, I was not sure I had a third one left in me, but I met these 2 phenomenal IIT Chennai engineers in Bangalore who had also left their jobs. They were building something, and the 3 of us teamed up and launched a product called RecruiterBox in 2011. For those of for folks that have been building over the last 12 years, many of them have probably known of RecruiterBox, used RecruiterBox. We ended up being one of the first cohort of breakout SaaS companies out of India. We took the bootstrapping route, and this is the company that taught me a lot and also gave me what I was awaiting in terms of, I guess, material and personal validation success. But that was a 7-8 year journey. 3 years I was in Bangalore, and then we moved, had an office in San Francisco, moved HQ to San Francisco because 80% of the customers, like many SaaS products, were from the US. And
Right.
went full cycle, continued bootstrapping it, growing it, had a go-to-market team in the US. And then late 17, early 2018, we sold the company to a private equity fund. And the 4th company after that, I was living in San Francisco at the time, and maybe the profitable SaaS and the private equity experience rubbed off on me. And I ended up buying another SaaS product company, a company called Fly Data that had raised $10-12 million in VC capital. But after 3-4 years, they were fledging along. They had done 2-3 products. Half the team had left, and the VCs had sort of written it out. And I was always curious about what happens to, we hear about the what a lot of companies get funded. We hear about the 1% that keep doing the venture scale growth. And I was curious about what happens to the rest of them. So
Right.
I'd done a cold outbound campaign to a bunch of them, ended up acquiring this company for less than half X of annual revenue. The reason I bought this company is they were not growing, but they had no churn. So it was very stable revenue. And any founder working in SaaS knows how what a blessing it is to have little or no churn, because then it's like a fixed deposit bank account, right? Like it
Right.
keeps coming every year and you can move around, do so much with it.
Right.
Bought that company, took it to profitability immediately because I removed all the costs that were not contributing to growth, took that profit, rehired some of my Bangalore RecruiterBox engineering team, and a year in, we rewrote the whole product, and a year in, we launched that whole product. But something funny happened. A direct competitor offered me 3.5x of what I had paid for it in a year. And when the offer came in, it was peak of 2021. So everything was crazy. And to be honest, it would still not make sense to flip or sell. That was not the goal. Like I just wanted to maybe even do a collective of profitable SaaS companies. And we enjoyed the 0 to 1, and this would be a good way to have existing revenue and keep going and not have an existential experience over and over again.
Right.
And but at the time, my wife and I, we had lived in San Francisco 7 8 years, and we were talking about moving back to India every year. So when this offer came and we had at that point built conviction that we wanted to move back, it seemed like a great segue. So last year in 2022, moved back to India, and I had been angel investing since that RecruiterBox exit. I've been angel investing very actively. I had done 22 angel investments with this very close founder friend of mine, Gautam. And long story short, he and I were talking about doing an early stage pre-seed VC funds started by founders where we could support companies in the 0 to 1 stage, because for the better or the worse, we both had done more 0 to 1 and not so much 10 to 100. And that's why today we are running Inuka Capital, which is an early stage pre-seed VC fund, obviously focused on Indian startups. I'll pause here. You asked for a summary, but that's been my life in the last 20 25 years. Just another quick fun fact. I actually, when I was 17 or 18, had an opportunity to go to the US for undergrad. And actually, my first business, you can't call it a company, was on campus. It was a website that delivered food from restaurants that didn't deliver. And so that's why I developed this worm in my head of doing a consumer company. The funny thing is, those later attempts failed, but I made more money on the student business over 2 years than I did later on in those consumer companies, because the restaurant used to cut me 30%. And by the way, this was a PHP website and not an app, because this was 2001, 2002. I'm a little older. So
Right.
there was no Google Maps or App Store or smartphone. It was just a website, and all the students were on their laptops, and it was a late night delivery service. So I could bunch the orders. So anyway, that's my entire experience of building. And now we've already made 5 investments. Some, hopefully we'll get into some of that, but incredible stuff is being built in India, and I'm excited to keep learning.
Now, I see that a very clear transition in the Raj from, say, to the B2C first B2C startup, the Yellow Pages startup, to your current. I think what you're doing now is a startup too, which is you're so focused right now as opposed to then. You just said it was Yellow Pages sort of thing, a listing site. But today you're very clear in terms of what you're doing. You're focusing on the 0 to 1 with startups. I think that there is so much of wisdom, I'm supposing, that you've accrued over the years, which we'll hopefully be able to tap into a little bit. But I'm curious, Raj, what were the biggest lessons you learned from those first two startups? I know they are B2C, and what you later on did is B2B. All that said and done, what were the two or three lessons that you learned that helped you in your box journey?
The biggest number one lesson is I went at those first two companies as a solo founder. And I'm very biased here, but and for so many of us, pride and ego gets in the way. But the truth is, very few people will be great solo founders with impact, and people love pointing to the outliers. But if you look at a larger bell curve of very successful companies, they will have a well-rounded founding team. So at least at a lot of personal cost of time and money, I learned this lesson. And I would be dishonest if I didn't admit it to myself often that the number one reason those two companies failed was me. Like I can keep talking about the market and the space and the timing, and which is all true because these lessons you'll keep learning even after you gain experience. But I think I would have they would have a startup is a bundle of risks. So if you look at everything like a risk person, like a risk man, a startup is a bundle of risks, right? And yes, you learn a lot of things along the way, but if the smartest founders, I think, chronologically work on reducing that risk low and removing a lot of uncertainty at first.
Hmm.
And the number one reason you can increase the probability of success right at the pre-seed stage is by having a well-rounded founding team. So I would definitely say that was one big aspect.
Hmm. Interesting. How can you explain, just so I understand here, what do you really mean by, or how did you feel that a co-founder or founding team, in this case, when you did RecruiterBox, helped you approach the initial product or the problem space better?
So RecruiterBox is a great example of this because Raghu was a back-end engineer, Girish was a front-end engineer and the product genius, and I was the go-to-market guy doing marketing and sales. And
Hmm.
you put three of us together, and we literally did not need a single person hired till month 15 or month 16 or month 18, right? Because literally between the three of us, we were able to put out the product, sell the product, market the product. So very specifically, right? And so a lot of the back end code was written by Raghu, a lot of the front end code was written by Girish, all the selling was done by me. In that case, in that particular example, imagine not having one of these pieces. Like
Right.
you would have either had to raise a little bit of money, hire a person, that person had to be worked out. And again, by the way, I'm not saying it's easy to find the right co-founding team. In fact, this is one of the biggest things. Like a lot of people try this, YC has it, there's startup school, there's other things, on deck has something else. There's a lot of founder dating, but it's super hard because just like marriage in real life, also a lot of founding VCs many times will ask that, oh, how long have you guys known each other? And you will always see
Right.
teams that you always see people who are in college together, for example.
Hmm.
Never, there's no perfect formula, but those things will end up working better than somebody who's met 6 months ago, etc. So that's one. But let me flesh out the recruiter box thing a little bit more in terms of founders. You A lot of the softer side of those things, like it's easy to mention skills and areas of focus, was that you are also helping each other build conviction and keep going. Many times what happens is you have you if you're alone, you are in an echo chamber and you could go in the wrong direction for 3 years, 4 years, 5 years. But if there's very high trust, then it's constantly you're compounding what is going on, you're
Right.
rechecking. Like even in GTM, right? Raghu, for example, kept telling me that we should have one or two things that are repeatable. So he was very clear about it from day zero. Now, everybody knows this in 2023, but in 2011, there was no SaaS Bhumi, there was no precedence for selling low ticket size software from Bangalore to the US. So these early insights, the collective was super important. And like Girish, for example, figured out very early that for somebody to have true self-serve behavior on the site, because we are not there in front of them selling, the onboarding screens have to have a certain set of flow and actions. And the reason I mentioned that is that was the game changer, actually.
Hmm.
Anybody that came to a site and logged in, instead of bouncing off that visit, though they went through those four screens, and if they got to the fourth screen, there was a 60% chance that they would add their credit card for the free trial. So things like this, but you could go on and on. I'm sure people have a lot of experiences, but for me, this was very stark that you have the right team. Like you'll hear VCs say this all the time that there's hardly any data at a very early stage, and we are betting on the people, we are betting on the founders, we're betting on the founders. And 75% of all great venture returns, many funds have put out this data, have come from pivots. So what was pitched to you wasn't even the business that continued and went on.
Correct.
So what are you analyzing anyway? It's those people.
One of the key things is to avoid distraction, to avoid the shiny objects early on, right? Because you're staying focused. At the same time, like you said, pivoting is built into the idea of a startup itself. You're trying to line up a set of experiments and try to carefully use data to pivot and move in the direction that you're supposed to be moving. I'm curious, what are your perspectives from building a recruiter box as to how you ended up using the power of a team to pick your initial problem? How long did it take to even get into at least a feeling amongst the three of you that yes, we nailed the problem?
Yeah, this is so two answers to this. One of the meta answers is what I've heard time and again, and I've tried, and now I've understood it deeply is see, a startup is a set of focused experiments, and the vision and the problem can be fixed, but the solution, how you approach that problem, how you solve that problem can be different, right? So, in these nuances, sometimes it's people can lose the definition of what is really focus and what is really a pivot. But as long as, let's say, the vision and the problem is constant and static, so that's one point. For us, I'll tell you what happened, right?
Hmm.
The funny thing is the RecruiterBox product was an accident, actually. So the starting problem was that why do, when we find jobs, the job description title, the job description, and the resume on the other side is a very poor indication of what is this work and what is this job. And when we are looking for a job, people want to really know, will I be a fit at this company, what's the real mission and vision of the company, etc. So the starting point was there, that is there a better way of discovering jobs, and is there a better way of seeing how a company actually works? Maybe a little idealistic. Even today, 12, 13 years later, it's been very resilient. There's still the PDF resume and all that, but we thought that this doesn't make sense because when we were looking for jobs, that wasn't the experience we wanted. So what we said is, what's the starting point of a job? A
Mm.
starting point of a job, even before a job board, is a company's careers page, is a company's website. And then we were like, what if we became the origination point of where a company creates a job? And that's why an ATS, an applicant tracking system. But what happened is, at the time, there were one or two companies in Bangalore that said that w- the problem, when we started looking at this problem, immediately the big problem became is, how do companies manage this today? They manage it using email and Excel. You know how every company had an email address, resume bhejo, careers at job.com, and
Right.
400 resume attachments will come in the email box. So
Right.
we got fixated at that. How will you open 400 attachments and go through it? And because suddenly what had happened is, you had all this Indeed, ZipRecruiter, and all that also. So applications increased. The friction was lower, so you had more applications. So now somebody has to go through all this. If at all they actually go through them, they have to go through all this. So we actually created just the parsing inbox where you could, where we would filter candidates for you.
Right.
And the hilarious part is, we had not even heard of this term applicant tracking software. We didn't know anything about it, HR tech. So it was true first principles, but by accident. That how do we make an experience as easy as Gmail, but where you can process 400 attachments like this, and you don't have to manage it in Excel. So you have your stages, and your team can collaborate on it, and so on and so forth. Now what happened is, people started paying us for it,
Right.
and we started tripling revenue year over year.
Mm.
So the truth is, we were actually still thinking about, oh no, this is a tool, it will make 2 3 million in revenue, but what is the big $1 billion idea and all of that? And before you know it, see, we didn't have any money. So after this thing hit $1 2 million in business, we were like, ये SaaS business सीख लेते हैं यार, ये कैसे करना है? Because like we means we were very focused on this business.
Right.
And eventually what happened is, Raghu and I were focused on RecruiterBox, and we peeled off Girish, who is the visionary genius, to actually think about what that big idea would be. And for the last 2 years of RecruiterBox, he was actually focused on that, and we were running RecruiterBox. And then, so it's funny how things work
Right.
out. And
Oh, I
but yeah,
think
that was our experience with the problem.
I see that. I see that. I was looking through your website back from 2011. You started with the easiest way to manage your hiring and went on slowly into track applicants. Then you started using applicant tracking system as a phrase. I could see that evolution, yeah, it's good to put facts behind why those things were changed, which is good to understand. I'm curious, what were the one or two key elements that you guys discovered at RecruiterBox? That one is, of course, the fact that tracking is important, which is what I uncovered from this conversation so far. But what are the other couple of elements that helped you decide that this is indeed going to be how we're going to position ourselves in the market, and of course messaging and everything else?
I'll tell you a progression of two, three things here. One is a very simple and accurate and complete answer, which is SEO.
Hmm.
So if you ask that revenue aaya kahan se, like how did you get this revenue if you were not spending any money, right? Because we were
Right.
bootstrapped. 2011 we started selling, we were doing a whole bunch of experiments. By mid 2013, we were in the top 3 organic ranks of applicant tracking system and recruitment software, and that gravy train lasted for 3-4 years. Okay, so we got all our relevant inbound traffic from SEO, from those keywords.
Right.
Hence, all the positioning on our assets, on our homepage, on our landing page, and even the user behind those keywords were obviously thinking of this mid-sized companies now as we grew up,
Right.
was thinking that we are looking for an applicant tracking system, and that became our positioning and that became our bread and butter. And for that segment of the business, it worked for us,
Hmm.
and that was it. But there was a lesson after that, which is that this inbound traffic and the self-serve crowd also used to churn. So we didn't have a 500-person company with a 10-person HR department using us. We had a restaurant in Phoenix, Arizona. We had a church in Texas. We had a high school in New York. We had a bar in Toronto. These people were using us. We had a snow plowing service in New England. These people were using us, which is all great. They came in, they saw something for $100 a month. They were like, wow, they had 4 5. But what they also liked is they could switch it off when they were not hiring. Now you can imagine,
Hmm.
while all this sounds very delightful, for our revenue, we wanted people, we were trying to increase LTV, right? We were
Right.
trying to have people pay us for 4 years, 5 years, and pay us a higher amount. Go back to your positioning question. What we learned here is that, and this is true for all B2B software, and I'm very taken by this now. And in fact, there is amazing material in terms of, and I'll come to those, that material in a second, but the one word is branding. And a lot of B2B companies don't think about this. They're thinking about marketing and funnel. But branding becomes so important when you're trying to build trust in the mid market and enterprise,
Right.
because many products start to look the same. And if you start talking about features, imagine if Samsung got on stage and started well, this is not a good example because
Yeah.
iPhone is a much better product, but imagine any B2B software company like HubSpot, again Salesforce or whatever you want to call it, starts listing out features.
Right.
The truth is, and people have said this before, that the enterprise buyer and the enterprise buying process is not nuanced and detailed as one would like to think. And yes, there are certain checklists and check boxes that you have to be above the bar, but when you have some products above the bar, very few buyers are going
Right.
into, oh, this feature is better here, this feature is better here. That may be true. How do you overcome that dog race? Anybody can build those features. Then you have some products who will build a much larger brand. And what happened with positioning at RecruiterBox is, when we started getting into that part of the market, there was a competitor called Greenhouse,
Hmm.
and they were a newer, supposedly relatively a newer company compared to like the other bigger form factors, Job White and all. And they started saying that it's time to do data driven recruiting. And they went to all the VCs and the talent team and VCs and says that it's time to do data driven recruiting. And they got a lot of mind space of companies and they were able to charge more. And the funny thing is, behind the data driven recruiting, if you actually plot it to how is that done, what's the feature, it was interview evaluation template. And they had a lot of canned templates. We also had those templates. But what I realized is, even after we had those, that feature set, the branding and the voice of what you stand for is so much more important than the features. Sorry, long answer to your question, but so we understood one thing based on keyword SEO, which ended up working and it worked well. But ultimately, if you're trying to build $100 million revenue company, you need to have trust. Like when people maybe they don't understand the word brand, so trust. And the two materials, and offline I can send you the links if you want to share it with whatever you share this thing with, is there are two podcasts that Lenny does, but the two authors are, one author talks about strategic narrative. So the best way for categorically to understand brand is how to build a strategic narrative. Every B2B company, every company should have a strategic narrative.
Right.
And the other one obviously is Bob Moesta's Jobs to Be Done.
Right.
But we've all gone through Jobs to Be Done in the product framework, but he really breaks down what the customer struggling moment is and what will be the inertia when you're actually trying to bring something new into the market. What will be the inertia of current behavior to new behavior, and is the pain of the transition higher than the pain being solved, right? So all of these things are connected to positioning. That's why I'm mentioning them.
No, that's beautiful. And if you don't mind, I would like to dig in a little bit into that. Can you help us understand how you went about? One is, of course, this realization that you need to build a quote unquote brand, which is basically trying to communicate what you're doing in a way that it actually resonates with the people that you really wanted to resonate with. How did you go about transitioning? I see this in your website, top level messaging. You started building trust with logos and using numbers like 2000 customers and all of that. But deeper, how did you go about transitioning this from where you were, which is just an applicant tracking system, to something that was considered more serious, especially given that example you gave with Greenhouse? How did you go about, and what was your USP in messaging at that point after that process?
I'll tell you the efforts we made, but the truth is we were not able to make that transition completely. And the truth is we were not able to cement that brand to the extent we wanted to. Okay, so that's the truth. But I'll tell you what happened in our quest to get there. So you're right that we moved from a tool mindset to a solution mindset. And we also had to learn what's the difference. Like the tool was, we were very much, oh, it's quick to sign up. You can get in, you will have time to value quickly on these two, three things. You can have your job postings go everywhere. And what we realized is that the little guys wanted that. They wanted easy, they wanted tool, they wanted efficiency. The larger guys didn't want efficiency, they wanted accountability, they wanted audit logs, they wanted how did the decision get made. They were not solving for speed.
Right.
So this was a system of decision product, the efficiency. But they didn't want to make better decisions. I don't mind saying that openly. From my understanding, they didn't want to make better decisions because the constraints were different. They wanted to have a system of record.
Right.
They wanted better visibility, not better decisions. So if you catch these two, our homepage, our collateral, our sales emails, our ads, our other landing pages all started solving for this.
Hmm.
Our case studies, the language started solving for this, right?
Right.
We understood this difference, but at the time, I didn't understand what I'm now talking about, which is the strategic narrative and the brand. The truth is, hindsight, life mein 2020 hota hai. Matlab,
Right.
I'm
Yeah.
telling you this now, but 6 years have passed since the acquisition also.
Absolutely.
So I didn't know this stuff then, and I certainly didn't know this stuff when I was in the throes of it before. But the effort that we made, that much we had learned and we knew. But now I realized that there was a exponential play just in looking at differently. So yes, when you see the 2000 customers, when you see the system of record thing highlighting what you do is you extrapolate that features, but then you have to have language, because
Yep.
people have a checklist in their mind and suddenly they're like, hey, this is lacking. And
Right.
also, by the way, in a lot of B2B situations becomes very difficult because everybody has those
Right.
features.
Right.
So you have to assume the competition is smart, right?
Right.
So then you have to have a unique voice. Then companies can do it all the time. I think one should have a strategic narrative about themselves.
Beautiful. I think that's spot on. Moving from features, benefits to trying to talk about results and outcomes and transformation, things like that. So I think there is so much I really want to dig in, especially because you grew that company to a point where you decided to sell it. I would love to get into, maybe we'll get into at some point, because I'm conscious of the time as well here. Let's shift gears here really quick. When it comes to your career as a whole, you kind of transition from that point, like you described early on, from being a founder, being someone who's building, to someone who is now sitting and helping people build, which is as an investor. You acquired this company, like you said, Fly Data. And I'm curious, what kind of really appealed to you about acquiring a company like Fly Data, apart from the fact that, like you mentioned, yes, it had low churn, it's a great, like you described, fixed deposit sort of thing. But apart from this, as if you can take your mind, you could jog back in memory without all this experience you have today, what was appealing to you about Fly Data back then?
So I'll tell you why I started even looking in that direction of buying a company, which I think is an important prerequisite. And then I'll tell you exactly why Fly Data. It's interesting. If you talk to some very, what I consider brilliant, bright minds in SaaS in India who've sold a $10 million company, $20 million company, $30 million company,
Right.
$50 million, $100 million company, they have sold it and they have seen the cycle. If you ask them now, and some have obviously done a second companies, some have done well, but some have also tinkering with certain products. The 0 to 1 is a very cold start problem. Okay, now there are two sides to it. The psychological side is some people don't want to go through some of the pain they have gone through earlier. So just like the very vulnerable side is, I was like, why would I go through that pain
Right.
again? It's not necessity based, so I have to choose it. So let me choose something that I really like. That's one. But the
Mm.
second, more tactical point of it is that 0 to 1 has a cold start problem. It's very hard. It means you have to find a new category, same category. You have to have some very deep insight about something, etc. So you could argue that, hey, you spent 7 8 years in HR tech, kuch to sikha hoga. Matlab maybe you have something you know about HR tech, right? So that's why some of us, and you'll see some companies do this in a venture studio model now, basically said that let's skip the 0 to 1 problem. What companies are already at 1, right? So that was the thinking behind looking for something like Fly Data, that it's already at 1, and now let's use our time, energy, and skills to scale it, to do all the other things that I was just talking about. It's stuck at 1 million, let's take it to $10 million in revenue, just very specifically. So Fly Data, why I was looking at it is two three reasons. One is it had zero churn, almost zero churn. So it had a certain revenue, like about right under $1 million in revenue, nice ACV size, annual contract value, and it was a data infrastructure product. It was pipelines that were taking the database real-time replication to Redshift, which is a data warehouse, and we could build more connectors, which we ended up doing, etc., to Snowflake and all that. And it had no churn. So
Mm.
when it has no churn, means people are paying for it every year. There is a need. If let's say 50 companies are paying, I can get 500 companies. That was the first thinking. The second thinking was, specifically in this case, that the deal should be viable. So a lot of times either the company is slightly growing or it's in India, so it's endlessly profitable, which is a good thing. You get a $800,000 company in India with 80 people and it's still profitable, and still nobody wants to sell it. In San Francisco, if you have 800,000, wo ek jan ka bhi nahi niklega. So there has to be a viability of the deal.
Right.
So that was the second reason. And uh, third reason was that I like the space also, because what's happening is so many companies, like I believed at the time, and it was proved by Fivetran and Hevo Data, which were the other competitors,
Mhm.
that there were tailwinds in the space. So these three were the reasons why fly data became possible, and we were interested in making fly data, and then ultimately it worked out because it was still a hail mary. Like, it was a huge risk, so I only did it because I got it at the price I got it at. I wouldn't do it at any other price.
Interestingly, what was 13 months, right? I think that was
Yeah,
13
yeah,
months you
yeah,
kept it for, and you 3x.
yeah.
That's fantastic, right? What are the couple of things that you really did that took it to that, not 3.5, but at least a couple of things that took it close to it?
I'll tell you everything I did, but it had nothing to do with the price.
Hmm.
Fluke. I don't mind telling you, 2021, that other company didn't have these Redshift ETL connectors. And they were like, wow, I'm getting this steady revenue with it. And you've rewritten the whole product. So I just got it at a better price. And it just happened to be that actually I bought it at the right price. These people also bought it at the right price. And this is where the interesting thing of value comes about. It was worth X to me, but
Hmm.
it was worth Y to them, or 3.5x to them, right?
Interesting.
Now I'll tell you what we did though. The big thing, funnily and interestingly, is we didn't grow revenue too much because we rewrote the whole product. We re-gutted the whole product. The product was still working, but we rewrote a new product. We did a Snowflake connector. We were working on a BigQuery, Google BigQuery connector. We had a Redshift connector. We did some partnerships. We redid the whole front site. We redid SEO. We started getting more traffic. We started servicing the current customers very actively and better. We added a few more new customers. But I don't think in that 1 year, if I like tell you stories, we did this and that had no correlation with 3.5x. The thing is, when they came and they made an offer, it wasn't even 1x or one, it was a little more than what I had paid, actually, 1.5.
Right.
And the point is, I was like, that makes no sense. Why did I do so much work? So then that price kept increasing, and
Hmm.
because it was 3.5x, I was like, okay, I what at what price would I do this? Because it's not I'm buying apples that I can go
Right.
and buy one more flight data. Like, people think, oh, you could just acquire a company, and I know there are a lot of SaaS companies, but at least I didn't know I had the formula yet.
Right. In hindsight, total hindsight, Raj, you in that particular case with Fly Data, you were both an investor and you also sold that company. From your mind, did you see a difference in the way it was positioned to you, or you saw it, and the way they saw it, the people who bought it?
Yeah, yes, but I think we both understood each other's perspective. So the other
Hmm.
company, now they changed the name, but was called Xplenty. And they were doing some reverse ETL and a couple of other things. Now, very quick, very interesting story. Xplenty was actually owned by a private equity fund called Xenon Ventures. And Jonathan Siegel of Xenon Ventures also was in touch with me during the RecruiterBox days. But it was a complete coincidence that we again met through this. And he had also made an offer for RecruiterBox. So we both joked to each other that we were meant to do one deal together. So that's just a little context, but it's
Right.
important because the deal also happened because he and I like had a little bit of trust and goodwill with each other.
Right.
And he did say that he knew what I had paid for it, and he knew what the deal was.
Right.
But we had rewritten the product. I think that itself was worth the extra value. And B said that they could immediately take it into the Xplenty customer base, which was 10x more
Right.
accounts, and this is the product that they needed. So
Got it.
they would get the value out of it faster than I could get new customers.
How did you go about picking these startups to invest in? What excited you? You may not have
The
one answer.
founder. No, the founder. I do have one answer. It was the founder. In half of those cases, I knew very little about the business. So I'll just take two, three. You probably
Right.
don't have time for 18, but I'll be happy to actually deep dive. If you ask anybody, angel investors, angel is very different than what I do now, by the way. Now I am responsible for other people's money. We have a rigorous process. We take weeks and months to make one decision, right? Angel, in 30 minutes, I was deciding because it was my money, right?
Right.
So even if I'm irresponsible with it, it was my money. And 99% of the time, it was to support that founder. And it's not that I'm uniquely saying this. When if you ask 99% of other founders, I don't know about professional angels who are only angels. I don't know that crowd.
Right.
But many founders with money who invest, yes, of course, they're evaluating their thoughts on the space. They think it will work. They get excited. All of that is true. But it's the founder that I wanted to back in 99% of the cases. But I'll give you an example. One of the deals that I had a good fortune of investing in is Micro Acquire, which is now called acquire.com. What Angel List is to raising angel money, acquire.com is to buying and selling of SaaS companies. And it's incredible because I think it was the right company at the right time. It's in the white space. We'll see what happens with it. But the thing is incredible. And Andrew Gatsecki, second time founder, crazy beast at building brands and building GTM. So that was easy. Like he was telling me that, oh, you did fly data. We'll talk about something else because this
Right.
was doing the fly data thing. And he's, oh, by the way, I'm still raising. Just send me the angel list link on email and I just invested. So a lot of that happened quickly. A lot of the stuff in India too, either it was other scale founders that we knew or they were investing in something and we just wanted to support the space and see what happened. But by the way, angel investing is not a good way to make money. I will say that controversial statement. It's not very controversial, it's factual.
Yes.
So people are like, how do I get an angel? How do I get into, I don't know. Because I was not in the, some people who are way better than me probably were in Dream 11, were in Swiggy and all of that. I didn't have that kind of access. I was more in B2B SaaS, and I don't sit here thinking, oh shit, this company will go 100x. I don't know.
Right.
It was just to
Fair enough.
help the founder get to the next stage.
Fair enough. You talked about this, right? There is a difference between what you did back then as an angel
Yeah.
and what you do today, which is more serious business. What do you really focus on when you say pick a company to invest in, pick a startup in this case? What are
Yeah.
the areas, two, three
Yeah.
areas that you focus on to
Yeah.
optimize and improve first when you pick one? I think I'm talking about two things here, Raj. One is how do you pick? The second is once you pick them, what are the first two or three areas that you really zero in on from your perspective?
Okay, perfect. I'll quickly break down the first part of the question in two parts:
Okay.
founder and market space. In founder, we have broken down the matrix in four kind of founders. Okay. So you have the second time founder, successful, had built a company to scale before. You have a second time founder, failed, meaning they failed at the last company. Then you have an operator from a 0 to 1,000 or 0 to 100 company, means they were the first 10 or 20 people at a scaled company. They were not the founder, but they were the first 10 people who were there right from the beginning to the company becoming 1,000, a unicorn or whatever. And then you have a domain expert, but not a founder, not a second time founder, not been at a scaled company, but understands the problem really well. And then the fifth one actually is none of the above. Could be a kid from Bits Pilani or IIT or wherever. So we still use a lot of subjective discretion, but these five types of founders get a different rating in our book. So we are trying to match a lot of these folks. At least we owe it to ourselves to have some sort of a bar. And because again, we talked about the market, the space will change so much. And I'm mentioning their journey, but again, I'll tell you where the exception creeps in. Every human being is so unique, and the people who are the most tenacious and they want to do this not because they want to sell at the next round or they want to do this because they are so aligned with wanting to build a large company, and you
Right.
can essentially feel that focus, etc., from them, right? So these are the first matrices for the founders. The second is for the market or space. Now we their B2B cross-border SaaS is great, fintech is great. We are actually looking at certain specific things which are not these first two things that I mentioned. interestingly. So it's not really cross-border SaaS, it's not really lending fintech, because there's so much happening there that we don't have clarity.
Hmm.
And also we have a product DNA. So we are biased with what are the product first, what are the founders that can build product in such a way that the product is the a differentiator to distribution. And I can explain that with a couple of examples too. But in terms of spaces, we what we have been learning from a lot of VC, like we were recently, we heard a talk from Rajan Anandan, or if you
Yeah.
look to Mike Maples, Floodgate, of course, Mr. Vinod Khosla. The one thing is, it's not about being right. This business is about, we know we're going to mostly be wrong. Like statistically, if you look at any VC portfolio, because it's not about right or wrong, it's about being early to something. So we need to have some original thought, right? So for
Right.
us, for example, and I don't mind sharing here, we haven't put it out publicly, is that we love people say that, oh, software businesses cannot make money in India, people won't pay subscription. We agree. So the model we are seeing work is, whatever product or software helps increase the margin or changes the margin in the value chain of the long tail of businesses in India, is an interesting business to us. So very quickly, I'll give you just two examples. We
Sure.
made 5 investments. There's a company called Pico Labs, which in India right now, when you get a blood test, there's a collection clinic, a collection agent who draws the sample, but then they run the sample to a central diagnostics lab where that $20,000, 20 lakh rupee machine is there,
Right.
which needs to be calibrated. But it's a classic hub and spoke model, agent in principle. So
Right.
80%, probably most of the margin is kept by the diagnostics, not by these guys. Pico Lab has created a portable hardware device and written machine learning software on top of it, like an app store. So even a Roche pharmaceutical can come with the biomarkers and configure their own specialized blood test. But they already have, Pico already has the 3 4 most common blood tests, and they have given this to the collection clinic, and they have turned the agent into the principal. So now they
Mm.
themselves can be the diagnostics, and 30% of the margin is kept by Pico. And if you think about it, maybe other people can replicate the box later, but the
Right.
interesting part to us is the App Store type of environment, because people will keep building blood tests for it. And so we think that has network effects, right?
Right.
So we are super excited by this kind of business. We're seeing the same thing happen with one company in transport. We're seeing the same thing happen for one company in long tail of real estate in tier 2, tier 3 India. I can explain those models. But the point is, software is being used to help one part of the value chain make more money. So when you, again, when if I zoom out to your question, how we're looking at space, we have a certain lens. We try to stay very open, because we are not being pre-seed, we are bottoms up, meaning we are, people are educating us about things instead of being top down, that we write white papers, we have a thesis, and we think SI hoga, we think EV charging mein SI hoga. We learn, like Bloom Ventures, for example, is an investor in our fund. So we read the paper. So we are learning from all these guys, but we're trying to be original and early in some of these, and these businesses are being built in India. That's the more important part. It's not something we are just coming up with.
Right.
It's these people are building these types of businesses in India, and we are very excited about the next 10 years.
Interesting. What happens when you once, let's say, Pico Labs, once you start invest into that business, what are the two or three places in that business that you are more interested in investing your time in?
Yeah, what we are learning is every one of these companies is different. So it's not, how do I say it? It's not like an incubator where we
Right.
roll out an onboarding. And we have had to learn this and adapt to this. Some people are giants at go to market, for example, but we want to get into their product or the app. And for example, Gautam, my co-founder and partner, he was working at Quora and Skillshare, and he took Quora non-English from 0 to 80 million users, by the way. For example, he'll look at an app and he'll be like, these are the 6 things you should do to create more viral loop behavior, for
Mm.
example. So we will often go, actually, this is unanimous across most of our companies. We will start with their product, that your show us your mock-ups, show us your products. So we are, so it's funny, so we are very different in terms of that. Many VC monthly calls will be more like that MIS, that
Right.
did you hit these numbers, let me fill your week by week or monthly numbers. That, of course, that's fine. I'm not saying, but our view is completely opposite. Like, you're not here to report to us, we are here for you. So what is, show us your product mockups, show us what's the bottleneck here, let us interview that designer or engineering lead for you, right? We literally go down, and then of course this everybody does to the T, which is we're constantly connecting them, because now we're constantly meeting a lot of people, so we're connecting them. Two of our companies are have terms for the next round, so we are connecting them to even more investors. We are connecting them to a lot of customers, right? And
Right.
then on the other side broadly will be go to market. Many times it will be about co-founder equity, co-founder structuring, would be about US go to market or non-India go to market versus India go to market. So essentially you start with product go to market, but it's different because again a lot of these founders are pretty phenomenal, so we try to also keep it at a pull mechanism. Like,
Got
we
it.
don't want to basically interrupt their process. It's the other way around. We want to make sure that we are an assist to their process.
We've had so much of discussion around RecruiterBox and what you're doing now. I'm curious, what keeps you really awake at night these days?
I have to be honest with you, not much. And as I'll tell you why I'm saying that. As a founder, I would have had a lot of answers for you. But let's face it, right now I'm a VC, and I'm a VC because I'm want to sleep at night, and I'm sleeping at night. So anything else would be dishonest. But I'll tell you what, it's been a very, so I'll give you two reasons. I don't know about keep up at night, but I'll tell you two reasons that I'm preoccupied with.
Hmm.
2 points.
Right.
One is it's been a very hard year to raise. So we are not done with our raise. So that keeps me up at night. Okay. A lot of the time is going in. And we are like you said, we are a startup. So it's not like we've joined a VC fund. We have put up a shop. We are a VC fund and we are raising money. And a lot of people have trusted us. Bloom Ventures has trusted us. Premji Invest has trusted us. Some institutions have trusted us. Avalanche Foundation in the US. These are all investors. And a lot of great individuals, a lot of founders, investors. But we're not done. We are halfway through. But at least we can start investing in all of that, in which we have. And the second thing that keeps us up is obviously is any of our companies, however brilliant they are, how much runway do they have? So very specifically, like on a meta level, like, oh, will my company do well? Will they compound? Will I make money? Obviously. But on a more specific basis, it is, will they run out of money? So
Right.
are we planning the, again, our whole motto is a startup is a bundle of risk, and each round should focus on one key risk, right? So while you're focused on the right risk, that doesn't keep us up, because that's the active dialogue anyway that we're having with the founders. That are you solving right now what you should be solving? Because there's some things you can solve next year also, or after
Correct.
the next round, right? But what keeps us up, to use your language, is will some of these people run out of money? Are we taking it too close to the hilt and some of that? But yeah, these would be the two things.
No, this has been a fun conversation. Thank you for answering questions with so much of detail, and also I think you've been quite frank with. I could see that in some of your answers, especially towards the end. If you were me doing this conversation with Raj, what is a question that you would ask that I didn't ask you so far?
Actually, the hardest question is, why am I doing what am I doing now? Why not another company? I guess that would be the question.
Sure, I'd love the answer
Uh,
too.
which, and it's crazy I volunteered that, because that is a hard question. I think I want to stay connected to the 0 to 1, but after these 4 chapters, and I moved back to India last year, I think I want to get connected to 0 to 1. I want to be inspired again. I want to be close to and learn from some incredible founders that are building companies that were not being built. Maybe the space wasn't there, and the quality of founder was also not there, not being built 10 years ago.
Right.
And I think this is the best time to learn, and we'll see what happens after a cycle or two.
Amazing. Thank you, Raj. This has been a wonderful conversation. Thanks for being candid to the level you could possibly be, and appreciate you taking the time to be with us today.
Thank you. Thanks, Karthik. Thanks a lot. Enjoyed it.